Hey everyone, welcome back to the channel. Today we're diving into 70 key insurance terms that are essential for anyone looking to get their insurance license. Whether you're studying for your exam or just want to understand insurance better, this video will break down each term in a clear, easy to understand way. Let's get started. 1. Accidental bodily injury. An accidental bodily injury is an injury that happens unexpectedly and unintentionally. Think of it as an injury that occurs by chance, like slipping on ice or getting hurt in a car accident. It's important to note that the injury itself must be accidental, not the action that caused it. 2. Accidental means. This refers to an event that's unforeseen, unexpected, or unintended. For example, if you accidentally cut your hand while cooking, that's accidental means. In insurance, both the cause and the result must be accidental for a claim to be paid. 3. Accidental results, accidental bodily injury. Similar to accidental bodily injury, this term focuses on the result being unintended, even if the action was voluntary. For instance, if you voluntarily go skydiving and break your leg, the injury is still considered accidental because the result was unintended. 4. Additional monthly benefit, AMB. This is a rider, or add-on, to a disability policy that provides extra monthly payments. It can help cover gaps in employer-provided disability benefits or Social Security Disability Insurance, SSDI. 5. Additional Purchase Option, APO. Also known as the Guaranteed Insurability Rider, this allows you to buy additional coverage in the future without proving you're still healthy. It's a great way to increase your coverage as your needs grow. 6. Any substantial gainful work. This phrase is part of the Social Security definition of disability. It means the inability to do any significant work due to a physical or mental impairment that's expected to last at least 12 months, or result in death. 7. Any occupation. In disability insurance, this term means the insured is unable to perform any job they're reasonably suited for based on their education, training, or experience. It's a stricter definition than own occupation. 8. Any occupation for which the insured is reasonably suited. This is similar to any occupation, but it's more specific. It means the insured can't perform any job they're reasonably qualified for, not just any job in general. 9. Benefit period. This is the maximum length of time during which benefits are paid under a policy. A longer benefit period means higher premiums, but it also provides more financial security. 10. Business overhead expense, BOE. Insurance. This type of insurance helps business owners cover expenses like rent, utilities, and payroll if they become disabled and can't work. 11. Capital sum. This is the amount paid under an accidental death and dismemberment policy if the insured loses a limb or suffers another type of dismemberment. 12. Cash surrender value rider. This rider refunds all premiums paid if no claims are made by the time the policyholder turns 65. It's a way to get your money back if you don't use the policy. 13. Change of occupation provision. This provision allows the insurer to adjust benefits or premiums if the insured changes jobs. If the new job is riskier, benefits may decrease. If it's safer, premiums may go down. 14. Concurrent disability. This occurs when multiple events cause the same disability. Even if multiple policies cover the disability, the insured can only claim one benefit. 15. Confined disability. Some policies pay higher benefits if the insured is confined to their home or a hospital due to a disability. This is called a confined disability. 16. Coordination of benefits. This is the process of determining which insurance policy pays first when multiple policies cover the same claim. The primary insurer pays first, and the secondary insurer covers the rest. 17. Cost of living adjustment, COLA. Rider. This rider increases disability benefits over time to keep up with inflation. It's tied to the Consumer Price Index, CPI, and helps maintain the insured's purchasing power. 18. Credit disability insurance. This type of insurance makes loan payments if the borrower becomes disabled. The payments go to the lender, not the borrower. 19. Decreasing term disability policy. This policy provides benefits that decrease over time. It's often used for loans, where the outstanding balance decreases as payments are made. 20. Delayed disability provision. This provision allows a disability to develop over time after an accident. As long as the disability occurs within the specified time frame, the policy will cover it. 21. Disability buyout plan. This is a plan funded by insurance that allows a business to buy out a disabled owner's share of the company. 22. Disability buyout policy. This is the insurance policy that funds a disability buyout plan. It ensures the business has the money to buy out the disabled owner. 23. Disability income rider. This rider on a life insurance policy provides disability benefits if the insured becomes totally disabled. It converts a portion of the life insurance benefit into a disability payment. 24. Elective indemnity option. This option allows the insured to receive a lump sum payment for specific injuries instead of monthly benefits. 25. Elimination period. This is the waiting period between the start of a disability and when benefits begin. A longer elimination period means lower premiums. 26. Federal Insurance Contributions Act. FICA. Taxes. These are payroll taxes that fund Social Security and Medicare. Both employees and employers pay FICA taxes. 27. Flat amount approach. This approach sets a fixed monthly benefit amount, regardless of the insured's income. It's common in individual disability policies. 28. Fully insured. This term refers to someone who has paid enough Social Security taxes to qualify for retirement or disability benefits. Typically, this requires 40 quarters, 10 years of work. 29. Future increase option. This is another name for the guaranteed insurability rider, which allows the insured to buy more coverage in the future without a medical exam. 30. Guaranteed insurability option. Same as the guaranteed insurability rider, this option lets the insured purchase additional coverage at specific times without proving insurability. 31. Guaranteed insurability rider. This rider guarantees the insured can buy more coverage in the future, regardless of their health. It's a great way to ensure you can increase your coverage as your needs grow. 32. Guaranteed Purchase Option, GPO. This is another name for the Guaranteed Insurability Rider. It allows the insured to buy additional coverage at predetermined times. 33. Guaranteed Renewable. This provision ensures the insurer must renew the policy as long as premiums are paid. However, the insurer can increase premiums for an entire class of policyholders. 34. Hospital Confinement Rider. This rider pays an additional benefit for each day the insured is hospitalized. It's added to the base policy benefit. 35. Impairment. Waiver. This rider excludes coverage for specific pre-existing conditions. It's used to provide coverage for an applicant who might otherwise be uninsurable. 36. Income Replacement Contract. This type of policy defines disability as a loss of income. Benefits are based on the insured's income before the disability. 37. Key Employee Insurance Policy. This policy protects a business if a key employee becomes disabled or dies. It helps cover the cost of finding and training a replacement. 38. Lifetime Extension Rider. This rider extends disability benefits beyond the policy's normal termination age, usually 65. It ensures coverage continues for life if needed. 39. Long-Term Disability Insurance Policy. This policy provides monthly benefits for disabilities lasting 2 years or more. It's designed to replace a portion of the insured's income over the long term. 40. Loss of Earnings Test. This test requires the insured to show a loss of income due to disability. If the insured can earn as much as before, no benefits are paid. 41. Morbidity. This term refers to the risk of becoming disabled. It's used to calculate premiums for disability insurance. 42. Medical reimbursement benefit. This benefit pays for medical expenses related to non-disabling injuries. It's often included in disability policies. 43. Natural group. This is a group formed for a purpose other than buying insurance, like employees of a company. Natural groups are eligible for group insurance policies. 44. Non-cancelable. This provision ensures the insurer cannot cancel the policy or change its terms as long as premiums are paid. It's the most secure type of policy. 45. Non-cancelable and guaranteed renewable. This combines the features of non-cancelable and guaranteed renewable policies. The insurer can't cancel the policy or change its terms or premiums. 46. Non-disabling injuries. These are injuries that don't prevent the insured from working. Some policies include a benefit to cover medical expenses for non-disabling injuries. 47. Non-occupational coverage. This type of coverage pays benefits for disabilities that aren't related to the insured's job. It's often included in disability policies. 48. Occupational coverage. This coverage pays benefits for both job-related and non-job-related disabilities. It provides 24/7 protection for the insured. 49. Own occupation. This definition of disability means the insured can't perform the duties of their specific job. It's a more lenient definition than any occupation. 50. Partial disability. This occurs when the insured can't perform some but not all of their job duties. Benefits are paid based on the percentage of income lost. 51. Percentage of earnings approach. This approach sets the disability benefit as a percentage of the insured's income. It's common in group disability policy. 52. Permanent disability. This is a disability that's expected to last for the rest of the insured's life. Workers' compensation often provides benefits for permanent disabilities. 53. Presumptive disability. This is a disability that's automatically assumed based on specific conditions, like losing 2 limbs or becoming blind. Benefits are paid without requiring proof of inability to work. 54. Primary insurance amount, PIA. This is the basic monthly benefit paid by Social Security. It's based on the insured's earnings history and taxes paid. 55. Principal sum. This is the amount paid under an accidental death and dismemberment policy if the insured dies due to a covered accident. It's equal to the policy's face amount. 56. Probationary period. This is a waiting period at the start of a policy during which only accidents are covered. Sicknesses aren't covered until after this period ends. 57. Pro rata. This refers to the proportional sharing of a claim among multiple insurers. Each insurer pays a percentage of the claim based on their coverage. 58. Recurrent disability provision. This provision treats a recurring disability as part of the original disability if it happens within a certain time frame. This avoids a new elimination period. 59. Rehabilitation benefit. This benefit pays for vocational training to help the insured return to work in a new occupation if they can't perform their old job. 60. Relation of earnings to insurance. This clause limits total disability benefits to the insured's actual income loss. It prevents overinsurance by ensuring benefits don't exceed lost earnings. 61. Residual disability. This occurs when the insured can work part-time but has lost at least 20% of their income. Benefits are paid based on the percentage of income lost. 62. Return of premium rider. This rider refunds premiums if no claims are made during the policy term. It's a way to get your money back if you don't use the policy. 63. Short-term disability insurance. This policy provides weekly benefits for disabilities lasting up to 2 years. It's designed to cover short-term income loss. 64. Social Security Disability Income, SSDI. This is a government program that provides disability benefits to individuals who are fully insured under Social Security and meet the definition of disability. 65. Social Security Rider. This rider pays benefits if the insured's Social Security disability claim is delayed, denied, or less than the rider's benefit amount. 66. Substantial duties. These are the essential tasks required to perform a job. Disability policies often define disability as the inability to perform substantial duties. 67. Temporary disability. This is a disability that's expected to improve over time. Workers' compensation provides benefits for temporary disabilities. 68. Waiver for impairments. This rider excludes coverage for specific pre-existing conditions. It's used to provide coverage for applicants who might otherwise be uninsurable. 69. Waiver of premium. This provision waives premium payments if the insured becomes disabled. The policy remains in force without requiring premium payments. 70. Workers' compensation. This is insurance that provides benefits to employees who are injured or become ill due to their job. It covers medical expenses and lost wages. And there you have it, 70 key insurance terms explained. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you don't miss any future videos. Drop a comment below if you have any questions or want me to cover more topics like this. Thanks for watching, and I'll see you in the next video.